Hey guys, welcome back to another video. So the popular fund manager Cathie Wood has just filed for another ETF. This I would believe would be her sixth ETF. In March she launched her space fund. We know that's got up to $600 million in assets under management now. Her most popular ARK Innovation ETF, which is the one everybody piles into, is $22.5 billion assets under management, although it's down 2% this year versus the S&P, which is up 20%. So it's having a really torrid time at the start of this year, but we know Cathie Wood has done really well 2019, 2020. One of her main picks obviously being Tesla, and she's been right on several occasions where others have kind of said that she's miles off, and that's similar to what we're seeing here now. She's getting a lot of scrutiny right now as she's super down, but she backs her innovative, disruptive kind of look and feel around her investments, going for high risk, high tech, high multiple companies in her funds. But this is slightly different. So what she's filed for is what she's calling the ARK Transparency ETF. Now, her idea here is this is kind of like an ESG play, kind of save the environment, transparency, social and governance. And what she's saying is she wants to create a fund which tracks the Transparency Index. Now, the Transparency Index is an index which kind of takes a bunch of different factors into play to rank companies by how transparent they are. And I'll come on to that in a second. But what this does mean is she's going to shun gambling, she's going to shun alcohol, banking, and even oil and gas, as she believes they don't have super transparent practices. So this could be really interesting. And it seems like it's going to be focused mainly on technology and consumer brands. So we already know from the limited data we have that Salesforce.com will be in there, Microsoft, Apple, Nike will be in there, Chipotle, and of course she's going to have Tesla in there as well. Now let's head over to the Transparency Index and take a look. So this is the T100, which is the Transparency Index. And if we just look at the list of companies on the index, let's just look at this. You can see you've got the likes of Coinbase on there. You've got CrowdStrike, Datadog, Agora, which is a good one, Airbnb, Amazon, Apple. You've got Atlassian in there. You've got some amazing companies in here. You've got Cloudflare, Chipotle's in there, like we mentioned, ChargePoint. You've got Lemonade, Lululemon, Microsoft's in there, Netflix, Nike, Nvidia. These are all in the top 100 transparent companies. And we're going to come on to what makes them transparent shortly. You've got Square, Starbucks, Spotify, Target, Teradyne, which we know is a big one in her funds already, Tesla. You've got TripAdvisor, Twilio, another great company, Workday, Zillow, Zoom, Shopify, Salesforce, which we covered, Roku, which we know she's a big backer of, Peloton. So you can see a lot of big companies in this Transparency 100 index, which she is going to track. Now, let's look at the performance. So this is the Transparency Index performance versus the S&P. So what it says here in the small print, which is just getting cut off there, it says it starts with a $10,000 hypothetical investment, assuming no withdrawals and no dividends. This is the cumulative returns from the 1st of July 2016 to June 30th, 2020. So half year, this 2021, sorry. Now, she's saying, they're saying here that the Transparency Index went from $10,000 to $50,000 so far, which is a 5x, and they're saying that's versus the S&P, which has done 2.2x to $22,000. So not only are they investing in transparent companies from an ESG perspective, but they're saying it's going to outperform as well from an investment perspective. And therefore, you can see why Cathie Wood is very cleverly trying to enter this market, because there's a lot of momentum and theme around companies and individual investors and retail investors looking to make ethical ESG-based investments, and some of the practices that these companies are following are putting people off from investing in certain ETFs just because of the odd company being a bit unethical or putting them off investing in the whole fund, and that's no good for a fund manager like Cathie Wood. We then want to look at this. This is really interesting. So if you look at this, industries excluded in the Transparency 100: alcohol, banking, chemical, confectionery, fossil fuel transportation, gambling, metals, minerals, natural gas, oil, and tobacco. So a lot of ones which you would expect in there, but also the fact that banking is excluded and oil and gas is quite a move. Now you can see the yellow bar is the S&P, the standard S&P with all companies in there, the 500, and the blue is T100. So they're saying from an environmental violation perspective, their companies incur 91% less environmental violations. They're saying from a financial crimes perspective, fraud and all these things, we see Theranos is currently being investigated for fraud for those following that case. They're saying theirs is 99% less than the S&P. For fossil fuel exposure, 100% less. For labor relation violations, 98% less. Product safety violations, 83% less. And toxic air pollution exposure, 88% less. And this is really interesting because this is basically saying across the board, whether it's environmental, whether it's financial related, fossil fuel, labor, product fraud, and toxic air pollution, we only want to back the companies and which are doing good for humanity and are transparent. And this is really powerful. And then you'll see here at the end, they say the best of both worlds on their website. So that's the Transparency 100 index, and that's how it's calculated. You'll notice companies like Alphabet and Google aren't on there. There'll be a lot of companies which aren't on there, which you would expect would form a big part of an ETF. So it's really interesting that Cathie Wood has gone down this space. We know DraftKings is a big part of one of her ETFs, so it's interesting how she's going to market this when it does come out to the public. But it's a clever move. Like I said, there's a lot of investors out there who are very focused on making ethical investments and who easily get put off the odd company. So you can have a fund with 50 companies in there, and if one of them doesn't meet the ethical needs of a high net worth individual, then they're going to move their funds elsewhere. And it seems like this is Cathie's way of saying, look, we can have a transparency index, we can have a transparency ETF which still performs whilst doing good for humanity. And I think this was really interesting to see the Transparency 100, how much of a difference they're having, whether it's an environmental product or labor, some of these top companies have. And I think oftentimes we can just, as investors, just focus on price to earnings, we can focus on EBITDA, revenue growth, last 12 months. But what are we doing in terms of backing companies who are doing the right thing? Because you can have company A who has better EBITDA than company B, but company B is doing far better for the world, far better for its employees, far better for the environment and fossil fuels and air pollution. How are we adding that to our analysis? I think that's really important in this next era of investing. All right, guys, that's Cathie Wood. That's her new Transparency ETF, which she's filed to the SEC. Look forward to seeing it. Look forward to seeing how she markets it. And we will see you in the next one.